down below it, tried to break above it again, and then pulled back down below it in the M period, and then we closed right here yesterday. So what happened? Yesterday was yet another look above and fail of the balance area. So what happened? The overnight trade took it to the opposite end of balance. Okay? It's just regular balance rules. It's what always happens. However, it is bearish, very bearish. Okay? We had a spike late in the day down, so spike rules were in play. This is the spike area right here. Okay? Spike rules were in play. Opening above it, bullish. Inside it, neutral. Below it, bearish. So spike rules are bearish. We're opening with a gap down, so gap rules are in play. Okay, by opening below it, we have repaired the poor low from 2 days ago. Okay, so the way you play the gap, you either, so here are the different scenarios that happen with gaps. Either the gap tries to fill, it tries to get up to yesterday's low, which is here at 41, looks like 80, 41.81, okay? This little red arrow, there we go. So the first thing it tries to do is fill the gap. If it fails to fill the gap, if it tries to push its way up to yesterday's low and it can't quite get up there and it starts to fail again, it's a short, okay? Because it's going to continue to rotate down. If the market, well, let's go in for the gap fill right away. I didn't even have time to set an order. If the gap fill fills all the way, if we get up to the low and then it finds resistance up there and it can't get back into yesterday's range, that is also a short for rotation down, okay? And then if it fills the gap and it continues to go higher, then pulls back down to somewhere around yesterday's low, maybe even this little node from the overnight, pulls down into here, and then it finds support, that's a long trade for continuation to the upside. Okay? This area here, the balance area low, to me is a very important level, right? Looking back, we've done a lot of business here. We found a lot of support here. Found it on the 27th, found it on the overnight of the 28th, and on the 29th, okay? Or the 30th, I'm sorry, on the overnight of the 29th and on the 30th. So this is where the battle needs to take place right now, is here at this line. If this fails to act as support, it increases the odds of further downside continuation. Remember, we have the base of this single prince as a carry forward from 2 Fridays ago. Okay, this is one of those things where it happens, and I make the statement, this is a lot of single prints. The market probably needs to come in and backfill these single prints, but then nothing happens for a week straight, and so I ignore it, right? But now that we're back below this balancing area, I'm bringing this back into view. And I'm remembering that this is a target to fill these single prints down to this level, and that this could act as support once it does. Okay? Happy trading, everyone. It looks like we're failing to fill the gap. This looks like a gap and go, which would be a short. Market internals opening a little bit bearish, but let's give them a good, with the gap, let's give them a good half an hour to hour to settle. Good morning, Phoenix. First one up this morning. Good to see you, brother. Welcome. John, coffee to you as well. John, do you have an assistant? You devilish dog, you. Jeff, good morning to you. Chris, good morning. Angelo, good to see you. Parlin, good morning to you as well. Captain Axelrod in the house, good morning. Daniel, good morning. Hi, good morning to you. Dr. Vijay in the house, good morning to you. And Trading Donkey is back. Good to see you, brother. Welcome. Okay, as we're starting to build volume here in the first few minutes, I'm making note of the fact that we're building it below that balance area low, which to me is an indication there are sellers trying to sell this level. In terms of support to the downside, this little node of volume from the overnight is currently acting as support. The next is the overnight low. Looks like that overnight low was right in the node of volume, right where the POC was from the overnight that was the night before that massive sell-off. Interesting. But yeah, to me, the next major support is the base of the single prints from 2 Fridays ago. All the way down there at 49. Okay, tempo's picking up. A little bit of a liquidation starting to happen here. Okay, well, I obviously it goes without saying, but I'm bearish at this point. We're below this value area low. We're building volume below the value area low. So my next target is the base of the single prints here at 41.49. It stands to reason the market might need to pull back up in here, put some more volume on these levels that only have a couple hundred contracts traded. Perhaps finding resistance around the halfback, where we were finding support inside this node before. Good morning, Kwaku. Good to see you, brother. Welcome. Bob, welcome to you as well. Happy to have you on this sell-off Tuesday. Okay, it appears that getting below the overnight low is starting to bring in more sellers. I just say that because the internals have pulled back. They were starting to push higher, but they're all pulling back. And price is continuing to push lower. So I think it's sellers that are starting to step in here. Okay, so I'll just mention what I'm doing here. I think that the base of the single prints at 41.49 will act as support as the market sells down here. But just in case it doesn't, I'm marking this line where we had the half back from 422. We also had the half back from 421 right here. So I'm marking that as a potential support. That's at 41.43.25. And then below that, the prominent POC from the overnight of the 22nd, I am marking that as potential support at 41.35.75. Okay. But I don't think we're going to get down here. I think we're going to find support at the base of the single prints. Let's see what happens. Joe, welcome. Good morning to you. All right, so here's where we find out if this is going to act as support or not. Remember, when I say support, it doesn't mean it has to come exactly to the dollar at that thing. It can be in the general area. It does not look like it is. Looks like the liquidation continues. There they go. Keep in mind that this is a liquidation style break to the downside. What does that mean? It means it's very fast tempo and it's very thin volume. So with the exception of these couple little random spots where we put in some nodes of volume, for the most part, this is paper thin the whole way and will likely need to be retraced later in the day. But for now, everyone's emotional. They're freaking out. They're selling as fast as they can at market. And so the market will continue to fall. As soon as that panic is over, though, an opportunity will present itself, in my humble opinion. Yep, the internals are bearish. There's no doubt about it. Keep in mind though, like when we look at this, like these advancers versus decliners can get to like negative 2,000. Like they have a long way they can go. The Nasdaq is very weak though. Okay, so here's this. This was the level that was in between those two halfbacks. So anywhere kind of around here could become support. Nope. Still panicking. Still freaking out. Play safe around here, guys. This could become support. Okay, on the way back up, the base of the single prints should act as resistance here. If there's no resistance and we push right through it, no problem. That increases the odds that the liquidation is over and the market can begin two-sided trade. Good morning, Carlos. I'm doing well, brother. Thank you for asking. Stan, Happy to see you as well. Good morning. Okay, we have acceptable taper at the low here. I'm not saying this will be the low of the day, but if it was, it would be acceptable. 2,900, 700, 200. Random barbarian. Sounds like you're in the right place. Pirates and barbarians. We just go hand in hand. Welcome, my friend. Let me know if you have any questions. Okay, so the market did not find support there. Let me just zoom out for a second. Yeah, so lots of volume is traded in this area here. Okay. So it could find support anywhere between where we currently are and this trend line that I drew right here, which was the prominent POC from 422's overnight. Okay. It does feel like we're starting to run out of sellers, right? The old business has concluded. The people that were long, that were going to freak out and exit their trades because they got weak hands, they've exited. Then this little process that we just watched, the grinding up and down below the base of the single prints here, last Friday's single prints. This was the new sellers starting to pile on. So now that we're out of the old money, let's see how much new business piles on the short side. Yeah, it's window trader. Okay, so here in the B period, we have got the one time framing has begun, the one time framing down, okay, which is a bearish signal. We're also still continuing the process of bringing in new sellers. Market internals are bearish. Okay, next downside support is the low from 423. Okay, well, as we're starting to pull back, my mind went, why don't I check the daily and just see what's happening here on the SPX on the daily? So we have just broken through the 20 moving average here today. Okay, so that means one of two things is going to happen. Okay, either the rotation down will continue, or it could mean that throughout the day today, we pull back up above this level, and then at the end of the day, there's just a wick that dipped below there, and we actually did find support at that 20 moving average. Okay, if that 20 moving average doesn't hold today, though, I would expect further downside continuation in the days to come. First targeting this trend line from these lows here that you can see, which right now the market would meet it at about 40.95. But then the next would be the 200 moving average. Just to take us back and show us what happens in previous times. You know, we tried to break below the 20 moving average, pulled back up in the same day, finding support. Did it again, found support. But then we finally broke through and had further downside continuation to the 50 moving average. Okay? Up here, pulled down, found support, broke down again, went to the 50 moving average, broke down again, found support on a previous trend line. Okay? Found support at the 20, broke through the 20, found support at the 50, and now we're breaking through the 20 again. Okay? So it seems like it's a crazy distance for the market to travel all the way down to the 4,000 levels now, but we still have this gap right here around 4,021 to 4,033. Okay. So the market selling its way down over the next few days and then repairing that gap and finding support at the 50 moving average would be perfectly normal market behavior. Okay, there'd be nothing unusual about that. So just something to think about. Also, looking at the candlesticks here, you can see one thing Jim Dalton talks about is aging trends versus newer trends, right? This being, so you had like this balance area here on the daily, and then you broke out. Look at how clean and clear the trend is to the upside. The breakout trend is to the upside. Now it's starting to get wonkier, right? Now we're starting to get it pulling back more and more. So that's just a sign that the trend is aging. It's coming to an end. Okay. But that being said, this is the daily, so this could go on for months. It's just a little perspective here at the lows. Oh, look at that. Found some support. Okay, so we got lots of single prints down here. That's good excess to the downside. Okay. We got good taper, excellent taper here on the low. You guys know I don't love the 15 contracts, but I'm going to completely ignore that because the taper to that point is so beautiful. Okay, so now the market is bringing in buyers. And let's see what we do in this little node of volume right here. Does this act as resistance for the next push down, or do we push through? Then we're going to hit resistance at the base of the single prints. Once again, if we push right through that, that's very bullish. Whereas if we hit resistance there, it could go either way. Okay. Looks like a good bounce for now. Trading donkey. Yeah, it really could. Could go up, could go down. This is what you guys pay me for, okay? This great analysis. 27 likes with 97 people watching. If you're finding any value in the stuff I'm saying, please hit that thumbs up. It's a great way to support the channel, and it costs you nothing. Thank you guys for those likes. Appreciate it. Chris, you must be a very prideful person if just pushing a thumbs up button is tough. I mean, you must really value your opinions of what you like and don't like. Which I respect. I respect that. Okay, bro? No one's judging you. All right, it's starting to feel a little bit safer to call this potentially our low for the day here, as the internals are starting to pick up a little bit. They're not quite bullish yet, obviously, but they're starting to trend a little bit higher. You can see the higher highs, higher lows on the ticks. That's often the first indication that the market is starting to move in a certain direction. So very cautious here. I'm not entering any trades here. I'll wait to go long once we rotate back up above the single prints here. But it's starting to see like we're running out of sellers. Fausto, good morning to you. Thumbs up, brother. T Jackal, welcome. Okay, well, being that we're only 3 minutes from the printing of the C period here, and the market is this close to the high of the B period, it seems likely that once the C period prints, we will get the cessation of one time framing, which to me would be an indication that the downtrend is over and that the market is ready to rotate. Okay, so should that happen, I will be ready to go long or go short. Whereas for those of you that know my trading style, when I'm bearish on the market because we're in a downtrend like this, I only look to go short. I don't look to go long. So if we get that cessation of one time framing here in the C period, I'll be ready to trade both directions, and I will expect rotation. Although I will keep in mind that we had a lot of single prints in this area right here, right? So I could easily see the market working its way up to the balance area low here before it finds resistance, because it needs to balance off all these single prints, all this low volume, and so on and so forth. Okay? So all in all, it's starting to feel like wow, look at the ticks. Yeah. It's starting to feel like we've reversed here. We found a good low, and now the market is ready to rotate. Yeah, trading donkey. It's not a bear market, that's for sure. No, a bear market would feel like this all day, every day, for days and days and days in a row. That's what a bear market feels like. So remember, for the cessation of one time framing, I'm looking for the C period to trade up here and get 2 ticks above this B period high, which would bring us to 4150.25. If we cannot get up to that level, we are still one time framing lower, and I would expect further downside continuation. Okay? So we're really just looking for the C period to work its way above the P period. So normally, as we get the cessation of one time framing here in the C period, which it looks like the market wants to give it to us, I would expect the market to go rotational, to just grind up and down, and sort of bounce around within its value area. Okay. I suspect if that's what the market does today, it'll pull its value area higher. So it'll probably look, let me get that drawing tool. The blue box will probably be something more like this right here. Okay. And so that means the market will probably rotate up and down around this area here, is what I suspect if the market's going to rotate. But I am still well aware of what happened just a few days ago, when we had that like crazy V-shaped recovery. We've had a couple of them in the market lately. Uno momento. So I'm just like looking at the regular, this is just the 15-minute candles, but I'm reminded that of this day, right, where we had this massive sell-off for the first part of the day, and then we just V-shape instantly recovered it all. Okay. That's not healthy market behavior. All right. And then, of course, the market turned off and sold right back down to the lows. It happened here as well. You can see the massive sell-off. This was in the overnight, but the massive sell-off that instantly completely retraces. So whilst my assumption is that the market is going to rotate down here at these levels now, I'm just well aware of the fact that it could straight up go all the way back up right here today. So what that basically means is I'll be much more confident going long below value. But if I'm going short above value, I'll go with very tight stops, is essentially what I mean. But we still haven't got it. We're still trending down here. I'm just thinking a step ahead. Okay, so as the counter narrative to what I was just talking about with the one-time framing, the exact opposite is that we don't get the cessation of one-time framing here in the C period, and that the market continues to one-time frame lower. If that happens, I would expect further downside continuation, and it certainly seems like that's the case. You know, in a when what should happen doesn't scenario, we came that close to repairing, or sorry, to getting the cessation, and we didn't. We also came right up to the base of those single prints and found resistance there twice, right, in the B period and the C period. So both of that is starting to make me lean more towards the trend continuing further. A great question, Random Barbarian. Yeah, so what you're looking at here for today's trade, I actually have two profiles sitting right next to each other. The one on the right is just expanded out, and the one on the left is collapsed. So I'll just show you if I were to collapse this one, they would be the exact same thing, right? There's not much to see here so far today, but the collapse profile just shows us a different view. It looks like this, whereas the expanded out profile just basically lets us see each 30-minute time period on its own. So it's easier to kind of track how the market has moved through the day, if that makes sense. And this over here, yeah, is volume. And it's the numbers are the exact numbers of contracts that traded at that level. And then the candlesticks just show you, easily with a visual reference where the most volume traded, being the largest candles, and the red is the most volume, pink is middle volume, white is least volume. Okay, nothing terribly scary happening at the moment. We're still kind of holding this sort of, if you consider this like an uptrend, moving up and to the right here in the advancers versus decliners and on the ticks, higher lows each time. We're right now about to break that, but as long as we maintain it, we might be able to pull back up towards the base of the single prints. Whereas if this breaks, which it already has here in the NASDAQ, if it breaks here in the ES, you're likely to have further downside continuation. Next support is at 41.3175, which is the low from 423. Okay, so there is the printing of the D period. So same thing as the C period, I would need the D period to trade its way all the way up and get 2 ticks above the C period high for the cessation of one time framing. Otherwise, I expect the downtrend to continue. Okay, this little quick bounce upward in the D period pulled the POC lower. So now the point of control for today is down here at 41.41. That is bearish. Also, it's worth noting as the market pushed its way lower down here in the D period, it pulled the value area lower, which is also bearish. Yeah, Joshua, I'm happy to talk about it. It is worth noting, though, that I don't feel like I should be teaching anybody how to trade here on this channel because my skills are not as much as a trader as they are, just reading the markets. So I feel more confident that I have something to offer reading markets, but that you should trade your own strategy. But yeah, the one you're talking about, buying below value, selling above, that's for a rotational day. This is a trending day. So trending days, there's the best way you can play a trending day. I've never been successful at it because I just don't have the patience. But the single best way you can trade a trending day is whenever you feel like the trend is starting, which I felt like in the A period as we were falling down and down when we got below this overnight low. I felt like we were beginning a trend down. You just go short. Literally, a trending day, you don't wait for an entry. You just go the direction you think the market's going to go. So you would just go short there. If not, you could have waited for the B period, right? And then when you didn't get the B period trading above the A period, or I'm sorry, when the B period traded down here, okay, and got below the A period low, which would have been right here, 2 ticks below, you were one time framing lower, you could go short there. Okay, so that's sort of the two ways you enter. You either wait for the verification that we are one time framing one direction or the other, or you just get into the trade and stay in. Once you're in the trade on a trending day, the best way you can trade it is just wait for the cessation of one time framing. Now here today, that would not be a good strategy because of how much volatility we're experiencing. But during a normal day with much less volatility than this, that's a great way to play it, right? So essentially you would like go short right now, okay? And then you'd wait for the D period to get 2 ticks above the C period before you'd exit the trade. So you'd literally just put your stop loss like 3 ticks above the C period here. Now for me, that's too much potential loss, right? So I wouldn't choose to enter here. I'd be choosing to enter higher up. So I would have entered, for example, in the C period short, which I actually did, because it was right up against the B period. I went short here and I just had my stop 2 ticks above the B period, right? And so the long and short of it is however you get into the trade, if it is a trending day, the best thing you can do is just stay in the trade until the cessation of one time framing. Okay? It's always the best way to do it. It's the least stressful. It's the most statistically accurate. But of course, if you're like me, you get really impatient in here and you sell here, but then you take profits here and then you try to sell again here and you take profits here and you're trying to make the little plays as you go along throughout the day. But if you can on a trending day, just enter in the direction of the trend and just stay in the trade until the sensational one time framing, there is an insane amount of money to be made doing that. But it just requires patience. Yeah, I hope that helps. As far as in this moment right now, like if I'm flat on the market right now and I'm trying to figure out what to do, how would I look at it? Well, first off, I'd be looking at the fact that the market is trending lower. So that tells me I'm only going short. I'm not going long. Okay. Long trades will be much harder than short trades. So great. That's the first thing. I'm looking for a short, not looking for a long. Okay. So the POC right now would probably be the best entry. Right? And I know you're saying, but Charles, when we're on rotational days, you describe the POC as being the fairest price to do business. And you say the traders that do business there are idiots because they're paying the fairest price. On a trending day, that fairest price will continue to move lower. So it is okay to buy at that fairest price. So for example, in the A period, this is where the POC was. In the B period, this is where the POC was. In the C period, this is where the POC was. And now in the D period, this is where the POC is. So you could have bought the POC on the trend at any of those levels and you'd be profitable. So for me now, the entry, if I wanted to go short, would be wait for the rotation back up to the POC. I'd be looking for resistance, probably in this little node of volume right here. And then I'd go short with that level. I wouldn't go short down here in this excess. I hope that wasn't just confusing as fuck what I just said and that helped. So once again, this selling here in the D period feels like a liquidation to me. So it feels like it's more of a panic, people panicking out of their trades rather than necessarily new money selling. I'd like to see the market pull its way back up and put in some more volume. This is very paper thin volume here. Thank you, Brian, for the heads up. Appreciate that, brother. Now we know why the selling is happening. It is news driven, which will likely lead to more selling as people get the news. We're yelling, selling. we're yelling, selling, yelling, selling. Yay. That's a tough question to answer, Alex. Are you asking which is the strongest today? Is that what you mean by which has the most support? Um, to me, the oh no, I'm looking at the Dow, the Russell. Yeah, the Russell's clearly stronger than the Nasdaq and the ES, which I would say are about the same. Doge nearing 60? That shit is driving me crazy. Normally, I love a bubble, but this is one that's frustrating me. Like, these Dogecoiners, man. I'm so frustrated because I know what's happening. The big dogs, they bought in and they're taking profits now, and little Joe Schmoes who are investing in crypto for the first time because of FOMO, because they're hearing about all the money their friends are making, they're all stepping in at these higher prices. And maybe it won't happen tomorrow. Maybe it'll happen a month from now or a year from now, but that fucker will pull back and they will all get eaten alive. I feel terrible for them, but that's bubbles, you know? Looks like Trading Donkey is working on a science fiction script. Science fiction. I know it's a liquidation because of the tempo and the speed. The tempo is the speed. The tempo and the thin volume, right? The way it just keeps falling and falling and falling, and it's not filling in any of these little thin prints. So that tells me it's a liquidation. But that's when I say that I just mean within like where the D period went from here to here. That was a liquidation. Overall, today, this is definitely new money selling, right? This is people who are finding out about the bad news and they're selling their positions. So this will likely continue, in my opinion. When you get a very elongated profile like this on a trend down, that is the sign that it is new money selling. If it were just short covering, it would be a B shape. It would go straight down and then it would just trend. And then it would just balance at a lower level. The fact that it went down, balanced, and now it's taking another stab down means that it's new money selling, which we now know is news related. It's Yellen selling. Jamie, you can just look up in the chat a little bit. Somebody mentioned it was something with Janet Yellen. Brian, love the joke about the Gates divorce. I hope you were joking because that definitely doesn't matter to the market at all. It might matter to some Microsoft owners, though, people that own that stock, because I bet you, just like Jeff Bezos' wife, as soon as she gets her shares of Microsoft, she's just going to start selling them in mass and giving it away. So that's probably the only people who consider it bad news. Yeah, support to the downside, a little bit harder to guess when it's when it's because of a news driven catalyst, because it's kind of just like you kind of just got to wait until the market has absorbed the information, has absorbed the news. Um, but yeah, I see 4111 as the low from 420. So right now, that's the next downside, or sorry, the second to next downside target I see. First, it's 4115. Okay. And we do still have these weak references. So we've talked about in the past days about the difference between weak and poor references, and I mentioned that you can leave weak references behind and never return for them, but poor references you almost always return and repair. We do have this one poor reference, I think is the only one we've left behind recently. Yeah. But that would be the target of all targets. 4058. Okay, let's just pull up the daily chart real quick. Okay, so 4058 is going to bring us somewhere in between this trend line and the 50 moving average on the daily. These to me are the next major supports that the market might find right here. But intraday, we could find support anywhere here, any of these levels. So we kind of just got to wait and see when the market fully absorbs the news. It's also nice to see that the value area is staying put now. It has been getting pulled lower and lower as we continue to push lower. So that's a good sign that the trade is starting to balance itself off in this area. We are currently backfilling some of these contracts that only had some of these levels that only had 100 or so contracts traded. Will that bring in more buyers or a further rotation lower? In 2 minutes, we will print the E. So we would be waiting for the E to trade its way above the D period high. If it gets 2 ticks above, that is a cessation of one time framing. If it fails to get above the D period high, expect further downside continuation. Philip, it is not odd that the bad news comes out when the market sells off. That's how they do their job, right? That's how financial media works. They literally write articles about bearish things and just wait until a sell-off day and then they publish it. Why do they do that, Charles? That's stupid. They're just adding to the fear in the market. Well, yeah. That's the point, is that when people wake up and they look at their stock price and they see that their portfolio is down, and then they click on, Wall Street Journal or whatever, financial news source they go to, they put on their Bloomberg or their CNBC. If the things that they're talking about, if the articles that they're reading are also bearish, if they're also fearful, then more people will do the reading. They'll read for longer. They'll watch for longer. So it's not out of malice or manipulation or anything like that. It's just more profitable for the financial media to be bearish when the market is going down and more profitable for it to be bullish when the market is going up. So that's what it does. As far as a V-shaped instant pullback, What I was mentioning earlier when I mentioned that that's been happening a lot lately was just that I won't be in disbelief if it starts to happen, but I don't think that's the case. I think if the E period can get its way back above the D period here, that we will just rotate around this area. We'll just rotate around what is currently the value area and just kind of bounce up and down. I don't think we'll rotate all the way back up into yesterday's range. But if it were to start to happen, I just wouldn't be surprised. Does that make sense? I hope so. Okay, so we filled in those single prints that were above us. That was the first week reference. This does, to me, feel like the trend is still going lower. Right? Below us, the market's got very little support. Very little to hold it up. But above us, there's a lot of resistance, including these little nodes of volume that it would hit as resistance before getting back to the POC. So I still lean bearish. Yeah, the Fed is the new Ponzi scheme, but how long can they keep that Ponzi going? You know, the Fed is a giant institution who is getting the whole world to participate in this pyramid scheme. So I think they could probably keep it going for decades if they wanted to. Okay, the high here, the E period high is weak because it's at the same level as the B period low. That is a good perspective, T Jackal. It's true. They print the money, so they're in a different league than the rest of us. All right, let's take a quick look at the NQ here and see what it's doing. Oh boy. Okay, so the NQ very bearish this morning. The profile looks basically exactly the same as the ES, but it is a little bit weaker. We still have some single prints above us in the E period here that are likely to get backfilled. But otherwise, it's basically in the same. Ooh, 2 contracts at the low. They really did run out of buyers. Run out of sellers. Yeah, this one, I wouldn't touch this with a 10-foot pole. You got a ginormous value area. Market could trade, bounce around in there easily. You got so many random little nodes of volume in here. Yeah, I think it's safe to say this is weaker than the ES. Thank you guys so much. We're up to 51 likes. Really appreciate that. Remember, if you're finding value in what I'm talking about here, smash that like button, hit that subscribe, click on the notification bell, send me your social security number and bank routing number. Armando, no, that project got set aside after I was so utterly disappointed with not TradingView, Tradeovate. When I was so disappointed with their market profile, I lost interest in looking at any others. But I will cycle through and try them all out. But it was just like that one. The control that you have is like nothing compared to Window Trader. It's like Window Trader just gives you so much more control. To me, as soon as I played with that for like an hour, I was like, nope, done with this. I'd rather just spend the money and have the good software. Yes, if you could just please send me all your Bitcoins. There's a little link below in the description to donate with crypto. I'll take all the Bitcoins, please. Yeah, I mean, Rocket, it's what you're talking about is stuff that fascinates me. I love to think about it. I love to talk about it, but I'm not really that well educated on it. You know, my thought process is like, if the dollar stopped being the world's reserve currency, then we could manipulate it the way other countries do, right? When other countries have like debt that's so enormous they can't afford to pay it off, they devalue their currency and then they use the cheaper currency to pay off the debt. Um, so I think as long as America's debt is dollar denominated debt, which it is because people are buying our treasuries in US dollars, even if we no longer are the world's currency, we could still get out of that debt by just mass printing money and devaluing our currency. Correct me if I'm wrong, chat. Am I misunderstanding that, or is that how we would do it? Have the micro Bitcoin contracts launched? I didn't even realize they were up and running. Because if they are, I'm going to start trading those motherfuckers soon. That's dope. I'm going to reach out to my broker and see what I got to do to set up to trade that. I'll also find out how much it would cost to add the data stream to the package I pay for Market Profile. And maybe we can start looking at Bitcoin, at least the Bitcoin futures, here on the channel. That would be fun. Exciting times. Okay, so the one time framing continues here in the E period. Expect further downside continuation. The E period high is weak because it is one tick from the C period low. The fact that it's weak slightly increases the odds that we will revisit and get 2 ticks of excess above the C period low. However, that is not more powerful than the trend down. Yeah, happy. What Window Trader does with the single prints is it puts these little lines right next to it, so it's very easy to see where they are. So if there are single prints that are below the day's trade, they're green. If they're above the day's trade, they are red. And if they're inside the range, they're yellow. We don't have any here as an example. I think there were some in the overnight. Yeah, so this little yellow bar. So that just makes it easier to quickly reference where the single prints are. Okay, next potential support to the downside, the prominent POC from the overnight of 420. I'm sorry, that's not a prominent POC. That's just a regular old POC. We've also got from 420, we've got this huge node of volume. Why does 420 matter, Charles? Well, that was the last huge sell-off, right? That was the last time the market was like, no, we got overly long here. Sorry, just let my data load for a second. We got overly long here. The market had to have a massive pullback. And this right here is where it found its support. So now that we're trading into where most of the two-sided trade took place on that day, right? That's a good area to find support. So pretty much anywhere between where we currently are and the 422 low could likely become support here for the finally getting the rotation back up. We're 5 minutes from printing the F period. We got this was the POC from the 420 overnight. So anywhere in here could be support. Chris, no, I'm not looking to go long in this market until we get the cessation of one time framing. Right, when we're trending down, I only trade short, and when we're trending up, I only trade long. So I will need the F period to print here, and then work its way all the way above the E period and get 2 ticks above the E period high here at 41.36. Then I'll be ready to go long. Okay, but before that, I only look for short trades. And for what it's worth, I'm flat right now because I'm just feeling like this move is getting to a point of exhaustion and that we will likely find support. As I said, because we found support on 420 on the low down here, I would suspect we find support somewhere before we get to that low or at that low. So I'm just patiently waiting for that next opportunity. Good morning, Jitten. Good to see you, brother. Welcome. I just thought I'd mention, because you mentioned your calls, I don't like giving people advice on their trades. Everyone should trade what they think. But just I was looking at the 310 strike price, and I was just noticing to myself that on the daily, on the Qs right now, the 20 moving average, I'm sorry, the 50 moving average is at like 23 or 24. Yeah, 324.50. This is a very strong support for markets, the daily 50 moving average. So I generally, unless you expect a straight up full on, 10%, 20% type of correction in the market, I would probably not buy puts below a 20 or a 50 moving average. But that's just me thinking out loud. It's still a perfectly legitimate trade. This looks like this is going to be the beginning of a larger pullback. Oh shit, the Qs, man, they really had a hard time getting above this high. Okay. So yeah, I mean, that's not an illegitimate trade. It's just something I noticed when you got a major moving average like the 50 on the daily, that often becomes support. But just looking back here, it never is. I guess the Qs are just different than the ES. Broke to 20, broke to 50. Broke to 20, broke to 50. Broke to 20, pulled right back up. Broke to 20, broke to 50. Yep, so you're right. Never mind, I take it back. Maybe that's not as strong a support as I thought. As you were. Okay, the ticks are beginning to trend higher here. That's a good first sign. We got the higher lows. Once again, we need to get the F period above the E period high in order to get rotation from here. Otherwise, we're likely to find sellers and push our way back down to the lows. It's the moment we've all been waiting for. Can the F period get above the E period and create the cessation of one time framing? Dun 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 dun. Or will the sellers step in and push the price back down? Dun dun dun. Stanley, yeah, that's the thing about one time framing that annoys the living shit out of me is that it's so specific. Like literally, if the F period gets up here and it even only gets one tick above the E period, you could turn around and have another sell-off that makes new lows. I mean, just like that. It's shocking. You really have to get those two full ticks above. Otherwise, the trend remains intact, right? There's somebody who drew a trend line down from here or whatever. And if, they'll sell it. So you got to get those two ticks above the E period. But we're very close. We're moments away. There's one tick. There's two ticks. Yay! And the market goes rotational. Rotational. Woo! Okay, so getting the cessation of one time framing here in the F period increases the odds that the market will go rotational for the remainder of the day. The way I like to play rotational days, I sell above value and then take profits at the POC, or I buy below value and take profits at the POC. Due to the fact that we have such a humongous range today, it might not present me with many trade opportunities, so I'll be going with much less probable trades, but with tighter stops. Okay, so I think the market will kind of grind around inside this area here. Say anywhere below the halfback at 41.45 and above the week F period low at 41.23. And I think we'll pull the POC a little bit lower here, down to right about where price is now at some point. So once the POC is closer to the center of this range, I'll start going short above the POC whenever I think the market is finding resistance, and going long below the POC whenever I think it's finding support. And as I mentioned before, on the shorts that I'll be doing above the POC, I'll be doing them with very tight stops, because we've had all these weird V-shaped recoveries over the last few weeks where the market has a massive sell-off and then instantly pulls right back. I don't think that's what's going to happen today. To me, that seems unlikely. But if it were to happen, I don't want to be stuck in a short. So I'll have very tight stops on the shorts above value. Okay. Also worth mentioning, we have a ton of single prints and the gap still above us. That is all excess. The market has to balance off excess. So there's two ways the market can do that. It can either rotate down here at lower prices, finding acceptance at these lower prices, or it can rotate back up, fill these single prints in with price, and then turn around and rotate back down. Okay. Enjoy the rotation. Whoever it was earlier that said they went long for a rotation to the POC, you fucking nailed it, my friend. I think you're going to get it. Yeah, Jeff, that brings up a great point I'd like to mention as well. I always, whenever I target the POC with a trade, I always put the target one tick below. I don't put it exactly at the POC because sometimes you literally just come to a tick to it and then your order doesn't fill. So I always like to, anytime I'm targeting a level, if I was targeting the halfback, I'd put it a tick or two below the halfback, tick or two below the POC. That's the way I always do it. Just a little bit of cushion for the pushing. Slade, good to see you, brother. I wondered why we weren't hearing bearish calls from you early this morning. What happened, my dude? Um, yeah, I mean, I've seen days like today before. The amount of volatility is intense, but if we zoom back, this day doesn't look that much different than this day did on the 22nd, right? I mean, Jesus Christ, we almost opened at exactly the same price, too. How ridiculous is this? Okay, so this was the opening price today. Just what? A dollar or two lower was the opening price on the 22nd. So, yeah, this is just a rinse and repeat of the exact same move. They got a little bit lower there before finding support. But, yeah. Also, as the day continues to trade, if we get a bunch of rotation inside the value area here, we will turn this into a B shape. B as in boy. And that would be a sign of short covering or I'm sorry, long liquidation, not necessarily new money selling. Too early to say right now, though. Happy, am I able to see stocks on here? Yeah, you can look at any financial market that you can buy the data for. I just don't pay for the data for individual stocks because I don't trade them. But yep, you can look at regular stocks. You can look at gold. You can look at commodities. You can look at forex pairs. You can look at any financial market. You and Donkey debated it. Oh boy, Donkey, are you still here? How are you feeling about that? He was right by Tuesday. Yeah, my day was made this morning as well. The levels are gone here, but the trade from like the low here down to whatever, I forget what the reference was that I had down here, but I got in with pretty big size from there to there and just fucking made my day. Boom, just like that. It's a nice feeling. Okay, the internals are still starting to trend up and to the right. The break of that trend would be the first signal of a rotation back down. Otherwise, further balance. That's a bummer to hear, Design Knob. All I would offer in advice is just to ask yourself the question of the trades that went against you. Why did you get into them? You know, what? Why didn't you get out at a point where it wouldn't have been as much pain? Take each trade as an opportunity to learn, and just don't get mad at yourself for making the mistakes. That's just part of the process. Bear pelts. Gonna be some bear pelts, some bear rugs. Yeah, we'll see. I mean, there's people going short here, right? So if the market rotates its way back up today, they will be, short in the hole. Also, just a reminder on the daily here that if the market pulls its way back up above this 20 moving average by the end of the day, so that it's nothing but a weak, I'm sorry, nothing but a wick that's just poking below there, that's likely to be good support for continued rotation higher. But if we can't get above that 20 moving average by the end of the day, I expect the market would want to trade down to one of these trends below. Okay, so here with the printing of the G period, we just pulled the POC down a little bit lower. Okay, so that just to me is a further sign that we're going to rotate around in this area. We got a weak G period high as well. So I will be looking for support inside of the value area. Like I said, normally I'd wait till we got below it, but with this big of a range, I'll be looking for support inside the value area for another rotation back to the POC. I was just thinking to myself, not in a braggadocious type of way, but just as a confirmation of all the hard work that I've put into this, that it is so nice to not be looking at regular candlesticks right now. If I was looking at this pattern or this pattern in the regular candlesticks, I would be feeling so bearish at this moment, like we're going to have a continuation down. But because I look in market profile, and I saw the cessation of one time framing here in the F period, and I saw us pull the POC down a little bit lower. It just gives me that confidence that I can buy down here because we will rotate back up. Is a nice feeling. Is a nice feeling. Did I just have my mic on that whole time? Sorry, guys. Um, okay, so it's starting to look like the uptrend in the ticks wants to break here. This one tick, the previous tick, kind of broke through it, but it pulled right back above. So that could be the beginning of a little pullback here. That being said, I do expect the market to find support somewhere around here, the lowest level being the repair of the weak F period low. But probably more likely one of these random little pink nodes of volume in here. The one where we're currently at, the one below it, which is at about 41.27, or the one below that, 41.25. And like I said, worst case scenario, repair of the weak F period low. Mediterra's looking at 53 as a potential short. I can see that. Get above value. Look for a rotation back to the POC. Makes perfect sense. I might wait. I wouldn't put in the order short there, but I'd wait to see what happens when it gets there. Does it find resistance? Because if not, I think the overnight low will probably act as more resistance up at like 40 or 57. But yeah, I think it's a good trade. Don't know if we'll get there. I'm thinking that the halfback is going to be the resistance to the upside. But we'll have to wait and see. T. Jackal with an excellent question about the POC. You know me. Yeah, so there's two different ways to calculate the POC. One is the price. The volume POC. That basically just looks at whatever level had the most volume trade that day. And then the other option is a TPOC, which is a time POC, and that just basically looks at wherever the market spent the most time. So let me just glance here real quick. So right now at this moment, the volume POC would be up here. It'd be one of these, I guess it'd be this level, 41.45.25. Okay. And the time POC is down here at 41.38.75. But they are often kind of in the same place. Ooh, Trading Donkey. Thank you for the insight. So there you go. You got a big node of volume up here right around the halfback. You've got the high of the value area. And you've got that 20 moving average on the daily as further resistance. So that's a lot of resistance waiting up here at this level. Design knob, if you're asking about the POC, it calculates from it's just this profile. So this profile starts at 6:30 this morning, 6:30 West Coast time, and then runs until now. So the calculation of the time would be from that 6:30 open. Yeah, the internals, this little like light gray line, that's where the day started, and that starts at the 6:30 opening bell on all four of them. Tomato, tomato. Mediterra, tomato, tomato. Lewis coming in with a totally off subject question. I will leave that one to the chat to take a stab at. How important do people think using a VPN is? I don't personally use a VPN other than when I'm trading crypto. I always use a VPN for that just because I don't trust those scam artists with those weird overseas exchanges. Yeah, I would recommend if you're in a hotel using a VPN. You never know who could be on the hotel Wi-Fi. Could be a hacker with a sweatshirt on. You never know. Happy? Yes, that is pretty much the whole point of looking at market profile as opposed to looking at the candlesticks, is that it gives me that three-dimensional view where I can see how much time the market spent at a particular level based on the number of TPOs that run across in that particular time. And I can also see the amount of volume that traded at that particular level. So that is pretty much what I'm using all day, every day to make my analysis, is how much time and volume is trading at each particular level. Okay, got some late day laggard sellers stepping into the market here. They missed the short. They were too nervous to go short the whole way down. So now they're piling on shorts here, hoping to get something for it. All right, does still feel like we're kind of, not perfectly, but we're kind of holding an uptrend here in the ticks, increasing the odds of a rotation up to the POC. Are you talking about when you ask about the banner, Happy? Are you asking about this thing at the bottom? I just made those in Photoshop. They're just images. As far as where the signal comes from, it comes from my brain parts. Okay, so we got a rotation to the POC, although we cheated to get it there. We pulled the POC lower. But here we go. It was at the G period, and it looks like we're going to trade our way back up to repair that weak reference. Okay, so why did that happen, Charles? Why did we just rotate right back up so quickly all of a sudden? Well, because the people that were stepping in and selling down here, they were laggard sellers, right? They were late to the party. They were hoping to get some of this sweet, sweet money that all these sellers were making. And then they created a weak reference because they were weak hands. And so when they couldn't get below the G period, they started to panic out of their selling, out of their shorts, and the market rotates back up to the POC. Okay, the fact that they are selling right at this sort of trend that's building here in the FGH periods is an indication that this is short-term traders who are weak hands that are doing the selling here. So that leads me to believe that some point later in the day we will get that rotation up towards the half back here. Okay, just your friendly neighborhood pirate here reminding you that on a rotational day, anyone that is selling the market below the POC, so anybody that's going short in this area, is short in the hole. And so when the market pushes its way above the POC, they are likely to exit their trades very quickly, causing a little liquidation. A little short covering rally. Okay. So as I'm watching them build their short position below the POC, I'm just feeling so sorry for those traders who are going to get stuck short in the hole. Um, Man, I keep turning off my mic when I think I'm turning it on, and vice versa. Yeah, so the advancers versus decliners is not pegged; it's trending higher. Pegged would look more like this, where it's just going straight across. But here you can see it's forming higher lows, so that's a trend up. Tick still trending up. Okay, we're right back at that POC. So once again, remember when we get above here a little bit, all these people that just went short will start to panic out and we get a little push higher. Then we're looking for resistance above the POC. Okay, and I see that happening right in this node of volume around 44. And then the half back up here. Okay, so that's the break. And then this little push, this is the short covering. That's why I always recommend to traders not to go short in the hole on a rotational day. Yeah, that's that. The regular ADD does look a little bit closer to being pegged, but it is still trending. You can see that it's moving up and to the right, correct? This is pegged straight across. Up and to the right is a trend, okay? Guess who sold the H period high? Weak hand sellers. They didn't learn anything down here. They need another lesson. And the market will be happy to give it to them. Okay, another resistance that we could hit above us is the 20 moving average on the 15-minute candles. Design Knob just bathing us in wisdom here. I mean, that is just a profound strategy. Highly impressed. Stanley need diamond hands. I don't know. I like the weak hands. I make my money off of them. So I've got no problem with people having weak hands. Oh, teach me, wise Buddha. Teach me, Design Knob. Some of those hands are so weak they can't even drink through a straw. Design Knob, don't you go picking on my joke. That joke was solid. Their hands are so weak that their lips are weak. Stay with me here. Stanley got it. He's keeping it going. They're so weak. They're not just boneless chicken, they're boneless chicken with ranch on top. Okay? That's weak. Okay, once again, as we repair this weak H period high, the next target for resistance is going to be this little node of volume around 44, which has the half back just on top of it, and also going to match up with that 20 moving average at about the same place. So this seems like strong resistance to me. Okay, so once again, repaired that weak H period high. So I'm looking for resistance here to cause a rotation back down to the POC. Watching these levels around 44, 45, and this moving average. Tick still trending higher. So again, any major selling that's going to happen, we will know it's coming because we'll get a big tick that just breaks the trend to the downside. Okay, so we're getting ready to push up into that node of volume and right up against that moving average. Really the only two options that could happen here. The market gets up to that moving average and it becomes resistance and causes another rotation back down to the POC, or it's able to push through. Okay, so it would be pushing through this node of volume, getting above value, and then it comes back down and it finds support. So the market pushes its way up here, comes back down, finds support somewhere around the high of value. That would be a good long trade for a breakout of the range, but I don't think that's what's going to happen. I think we're going to come up in here, find some resistance, and then rotate back to the POC. But I just always want to see both possibilities so I'll know what's happening if I'm wrong about my guess. Thank you, Miles. Appreciate it, brother. Okay, just a reminder, the tick that breaks the trend, that clearly breaks lower, will be the beginning of the next pullback here in the market. And it looks like we're right on the edge. If that happens, look for the market to rotate down, find support somewhere, and then rotate back to the POC. All right, so it looks like that 20 moving average is, we didn't quite get to it, but it is working as resistance here. Still maintaining those higher lows on the ticks. So that indicates further rotation up and down through the POC. And another weak I period low. Okay, Jose, your question, why F breaking E high makes it a rotational? Why F was not the pullback high? Oh, I see what you mean. So the question was, how come I didn't just think that the F period was another pull, like a dead cat bounce or whatever, that would sell off right away as well? The reason was because of the cessation of one time framing. When the market is trending down, as long as the highs stay at least or don't go more than 2 ticks above the previous high, the market is trending down. So what am I talking about when I say that? The market is trending down. What does that actually mean? It means that the participants of the market, a majority of them, believe the market is going to keep going down. So it means that there will be, if you're trending down, there will be more sellers than buyers, and that those sellers are looking for opportunities to step in and sell. So the A period freaks everybody down. We print the B period. Okay. C period comes up. Where do they sell? Where do they go short? $1 or $2. Yeah, $1.75 from the previous high, right? Why are they doing that? Well, because everyone believes the price is, or, not everyone, obviously, a majority of traders believe the price is going to go down, and they're looking for where they enter. Where do they go short on their way down? And so as soon as they start getting close to that B period high, they just start selling it. But because a majority of people, okay, that's what the trend means, is a majority of people think it's going to go down, there is no one to buy at these levels because most of the people think it's going to go down. So there's no buyers, yet the sellers step in. So the C period can't get above the B period, right? It just can't do it. If it were to sell its way up and get just 1 tick above the B period and then they sell it, it's the same thing. It's the same mechanism taking place, which is that the market has more sellers than buyers, plain and simple. Okay. So I don't know how Jim Dalton figured this out. I don't know how many years he had to watch the profile, how many different time periods he had to make them 5-minute candles and 15 and 1 hour and 4 hour. And he had to try everything under the sun to figure out what is the magical indication that that overall feeling in the market, more people believing it's going to go down than up. When does that come to an end? And he has just figured out from, 30, 40 years of watching this stuff that it's 2 ticks, right? If you get 2 ticks above the previous 30-minute time period, it's magic, right? Why does the ocean flow out and in every day? There's just, of course, in that case, we know it's gravity from the moon or whatever. But the point is that there's just certain things that happen over and over in the universe, and they just repeat, and they just are. This is one of those things. If the market can get 2 ticks above the previous 30-minute time period, why it's 30 minutes, I can't tell you. Why it's 2 ticks, I can't tell you. But just over and over and over again, day in and day out, just like the moon pulling the oceans in and away from the shore day in and day out, if you get 2 ticks above the previous 30-minute high, it just changes the momentum. I can't explain why. It just convinces some people to start buying. And then you don't have more people that want to sell than buy, and then the two-sided trade takes place. Okay? So why it works out like that, I cannot tell you. But just look at what happened today. We were one time framing lower, and the market just kept going down and down and down and down. And then we got those 2 ticks above. And what has it done since? Rotated up and down, up and down, and up and down. I wish I get this question like every day, and I wish I had a better answer for it. I can't tell you why the one time framing works. It just does. And it works like 90% of the time. It is shocking how often it works. So I hope that helps. You got to understand the difference between rotational and trend. Rotational means the market participants don't know where the market's going to go. Half think it's going to go up, half think it's going to go down. Trending means more people believe it's going to go one way or the other. The question of, can the I period high be sort of the pullback high, right? So if the market is trending lower, could this be the spot where you get the reversal? The The answer is yes, it absolutely could, particularly because it's right where you met that 20 moving average. So that could be the high. But it doesn't necessarily have to be, right? As long as we continue this trend in the ticks, where the ticks are trending higher, looks like the Nasdaq's breaking that right now. As you know, as long as we're doing that, the market can keep grinding its way higher, and then we can take another pass at getting above that level. But I would just tell people, once the day goes rotational, it's better to change your thinking. You shouldn't be thinking, is this the high of the day? You should be thinking, once you get up there and then you rotate back below the POC, you don't worry about the high anymore because you're rotational. Now you're looking for support, right? As soon as you get below the POC, the goal is to find, where does the market find support, and then go long with a rotation back up. Once it's above, you're looking for resistance for the rotation back down. Phoenix, yeah, we might be one time framing from the low. We are one time framing up from the low. I've talked about that on this channel before. I don't often look, I just look at the first trend of the day, and then on the break of it, I look for the market to go rotational. But yes, there's nothing wrong with keeping track of one time framing higher. I just wouldn't necessarily go long just because the market's doing that. I would still trade it rotational. Go long below value, go short above. Okay, looks like the J period high might be weak here. It is. J high is weak. Will J low be weak? Let's find out. Tune in next week to find out. Yeah, I use, as far as entering my trades is concerned, I just use a 15-minute candlestick chart. On trading view, it looks like that right there. Bada bamskis. I just use the 15-minute candles because I find them to be the best for me to read. But everybody should do that based on their own, personal likings. For some people, the 5-minute candles is better. For me, that's just too much noise. It's too rapid of a change. And 30-minute candles are too slow, too boring. So I like those 15 minutes. That's the magic number for me. Jonathan just woke up down there in Australia. Uh, yeah, I think the sell-off is because of something that, what's her name? Janet Yellen said about potential future things they could do. I think that was the catalyst. MMMM. Are you saying that my singing brings you profits? MMMM. My singing brings him profits. Is he a boy or a girl? I don't know, because he's just got letters for a name. So I'll call him they. They make their money off my singing. This is a bad song. I'm sorry. I need to pick a real song and just mimic it. Well, Jonathan, the problem is they can't say anything right now, because anything they say, if it has even the tiniest little bearish tone to it, is going to cause a massive sell-off because of the bubble. We're in a bubble. All right. Well, the market is getting sleepy here. The range is getting tighter and tighter. You can see the candlesticks are getting smaller and smaller. So that's like that spring that's getting tighter and tighter and tighter, increasing the odds that when we do break out of this little range, it'll be a little harder. So once again, I'm looking for the market to either push up and then find resistance towards the upper end of the value area here, or to push down repair these weak references, at least the first two, and then find support for rotation back up. Okay, we seem to be breaking through that 20 moving average. Getting a push in the ticks here. Looking for resistance right around that 44.75 level. Okay, so we're starting to head up into this little area of resistance, this little node, and the halfback right there both act as resistance sometimes. The positive side of it is as we begin to trade higher, we are pulling the value area higher, which is a little bit bullish. Okay, but the market is still rotational. This is that pent up. Remember I mentioned it's like the spring getting tighter and tighter. This is the breakout of that tightness as we punctured through the 20 moving average. So now we'll see, does the market, I was going to say it trade above the halfback, but it did. So now that it's traded above the halfback, does it pull a rotation back down to the POC, or does it find support in this node of volume? If it does find support here in this little node of volume around 44, that would lead to a continuation higher in an attempt to start filling these single prints from the A period. Essentially think about it as a breakout of balance from this balancing range we've had today. But if not, then a rotation back to the POC is in order. Okay, it doesn't really appear like we're getting too much support in here, so that to me increases the odds of a rotation back to the POC. But maybe not. The ticks have already pulled back pretty far. Got to just keep watching. Man, somebody just hit the market with a giant sell order at market. Did you guys see that? That couldn't have even been a bot. That was one sell order at market that just chewed through like a huge chunk of price there. So as we work our way down to the POC here, we'll keep an eye on this 20 moving average on the 15-minute candles here on the SPX. Oftentimes, once you push through the 20 moving average to the upside, it then becomes support on the way down. So we'll be looking as we get back towards the POC here. Does the market start to find support to take another attempt at a push higher? Or does it fall back through that 20 moving average? Blazed. Yeah, the reason I look at the SPX uh, instead of looking at the futures contract is just because it only calculates the regular trading hours. It doesn't include the overnight. And I have just found the reason I use the 20 moving average on the 15-minute candles only with the regular trading hours range is that I've just found it to be incredibly consistent. It almost always works. I would say at least 2 out of 3 days a week. It gives us really beautiful signals. We've talked about it on the channel before. My guess as to why it works the way it does is I think there's a lot of bots that are programmed to use this moving average. So when a price is pushing up to it, they're programmed to sell, 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 sell. And then that's why you often get resistance like we did here today as soon as you get up to that price. And then once the market pushes through it, the bots, when it comes back down, are programmed to buy, buy, buy. That's my guess as to why it works so effectively over and over again, would be that there are computers that use that as a level. Okay, so we rotated back down to the POC here. So the question becomes, does this bring in buyers or more sellers? And now we're right at that 20 moving average. So do those bots start to buy, 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 pushing price back up? Or does the market force its way through, likely leading to the repair of these weak references below? $106 viewers, 62 likes. Can we get that up to 75? Are there 13 brave souls out there in the chat who are willing to push a thumbs up button? Look deep within yourselves. Do you have what it takes to smash the like? $69. That's a great start. I need 6 more warriors of the pirate traders community to step in here and smash that like button. Mediterra. Oh well. Do I have 2 dislikes? Those sons of guns. No, I mean, there's no way for me to know who's pushing like or dislike. But I don't mind. Let them hate me. I'm just here every day giving out free knowledge. If that makes them upset, then, they got to live their best life. Okay, so currently we are finding support. We're bouncing off that 20 moving average. Those bots are doing their job and they're buying it on up. 74. Is there one loyal fan who has not liked me who will give me a like? Anyone? Any takers? Pew, 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 pew. 75. Thank you very much. Love you all. Let's continue to watch the market rotate. Alex, I appreciate you saying so. Feel free to hit me up with any questions you might have. Okay, we just pulled the POC higher here in the K period. We're still below the halfback, but that is a little bit bullish. Um, Alex, good question. Somebody had asked me about the difference between weak references and poor references earlier, and I forgot to respond to that one. So yeah, first and foremost, reading weak references and poor references is exactly the same thing, which is just that you're looking for the market to get at least 2 ticks away from previous references. Okay, so down here on the week I, the I period low was weak because it was 1 tick from the B period low. If it had been 1 tick higher, it would have been a good low because it would have been, oh no, actually the E period would have made it. So let's say the B period was 1 tick lower, then it would have been a good low. But because it's 1 tick from the B period low, it's weak. Okay. Same thing with the J, because it came to the same level as the I, it was weak as well. So what weak references mean is that you have that thing where you're less than 2 ticks away from a previous reference inside the range. Those are called weak references. And then if you have that at the high or the low of the range, which we don't here today, and we repaired all the previous ones, so I can't find an example to show you. But if you have that at the higher low of the day, where the higher low is not 2 ticks from a previous reference, then it's a poor reference. Okay, so it's exactly the same thing, only 1 tick away from a previous reference. It's just that it's at the higher low of the day. Okay, so that's how you read weak and poor references. You're looking for the market to be at least 2 ticks from previous references. Okay, just to show you, we had a poor low. So here's a poor low. Okay, the M period needed to get 2 ticks below the I for it to be a good low, but instead it was a poor low. Okay, so that's how you read poor and weak references. So what do they mean? How do you trade them? How do you think about them? Well, weak references, there's 2 ways to think about them. The first is they increase the odds that you will return to that level and repair it, right? So when we had the I period low here that was weak, that just increased the odds that the next time frame or any of the time frames later in the day will come down and get a few ticks below it. Okay? So that's the one way to think about them, is that they just very, very slightly increase the odds that you're going to return to that level. But I would not get locked into them, because you can leave weak references behind all the time and not come back and visit them. So it's only a small increase in the odds that you'll come back. However, the more of them that you stack up, the more the odds increase that the first of them will be repaired. So if all there was just the weak I period low, I wouldn't even be paying attention. I'd totally ignore it. I wouldn't care at all. But the fact that we have the weak F period low, the weak H period low, and the weak J period low, to me, significantly increase the odds that we will come down and at least repair this one, at least repair the I and J. Okay? So that's the one way of thinking about it. The other way is when we see lots of these references get stacked up on top of each other, like we do right now, we know who the participants are that are doing business, right? We know that the people that did the buying down here are weak hands buyers. Okay? And so that just means that they are probably short-term traders. Well, why do we care, Charles? Why do we care if it's short-term traders who are doing the buying here as opposed to long-term investors or bigger money players? Well, the reason we care is because short-term traders have to take profits on their trades. So if you bought long here, here, or here, at some point today, you have to sell your long contract in order to take your profits and have your money. So that could cause the market to pull back down to these levels, which is why they are weak. Okay? So then that's weak references. Well, what about poor references? What's the difference between a poor reference and a weak reference? Well, we know we read them the same way, 2 ticks, okay? But because they're at the higher low of the day, they behave differently. And the difference in behavior is poor references often first cause the market to sell away from them, okay, which weak references don't do that. Poor references often first cause a push away, but then they almost always get repaired, whereas weak references, they don't. So let's go back and look at that one that I was just pointing out from the other day. So we created here on the 30th a poor reference, a poor low. What did the market do? The next day, it completely pushed away, or the overnight, I should say, the overnight market pushed away. And then the next day, we pulled back down. Then that overnight market brought us down to repair the poor low. Okay, so that's another tricky thing about the poor lows is they don't have to be repaired the same day. You can leave a poor low behind for weeks, even months, and then come back and repair it. So I know it's a lot to try to understand all at once, but it's really valuable once you can wrap your mind around it. Yeah, so Brian, excess is getting those 2 ticks, right? So, for example, the J period has good excess. It got more than 2 ticks above the I. The A period has tons of excess, right? All these single prints are excess. Down here at the low, these single prints are excess. But there is no excess in any of these lows, which is a sign that it's short-term traders buying them up. Okay, we're moving back up to the halfback, which was resistance previously in the J period. So now we ask ourselves, will it be resistance again for another rotation to the POC? Or are we ready to break out of this balance area and start trying to repair some of these single prints left behind this morning? Yeah, Alex, it's not that it slows down an uptrend. It's, let me try to figure out how I would explain this. It just means that the uptrend can't continue forever, if that makes sense. It just means all these weak references just mean the people who did the buying here, eventually they have to take profits. And probably before the close of the day today, right? So it just increases the odds that at some point the market finds resistance and then rotates back down. But it doesn't necessarily affect the market's ability to keep going up. These short-term traders can keep pushing it and pushing it and pushing it. It's just sooner or later they run out. So in terms of a practical trading mind frame, all that would mean to me here is I'm less likely to go long expecting a big breakout and more likely to wait for the breakout to find resistance and then go short on the way back down. Yeah, Brian, excess on a higher low is part of taper, right? You don't have good taper unless you have at least 2 ticks of excess. But yep, they're both things you look at. Julia, welcome. Happy to have you here, and it's my pleasure. Yep, I do stream pretty much every day. Sometimes I take a day off or a week off here or there, but yep, I'm here all the time. Hit that subscribe button, hit that notification bell, and YouTube will let you know. Wow, 89 likes. Thank you guys. I really appreciate that. Okay, so now the market's looking like it wants to break out of this range that we've been stuck in here. You could basically just call it the value area, right? It's trying to bust out of here and get a breakout to the upside. Start filling in some of these single prints that need to be backfilled. I am of the opinion that if it does so, it will find resistance. I don't know where. This is a huge range with lots of single prints. So it could happen, right in here, or we could have to push our way up into the overnight and sort of find resistance over here. I don't know what those lines are. In maybe this node of volume up at 63, right? 60 to 64-ish. So it's hard to know where the resistance will set in, but because of all the weak references below and where value is, I do think that once we get up into these single prints, we will find resistance and get a rotation back down. I appreciate it, Josie, but it's no big deal. Haters always going to hate. And I bet you the players are going to play. Miles, what do you mean by an advisory? Do you mean like a paid service, like a signal service? Yeah, Miles, I do my best here on the live stream to explain every single thing that I'm thinking, with the exception of just the actual trade entries. But that's just because I don't really feel like I have any edge. I don't have anything to offer anybody when it comes to entering trades in that arena. And the reason is because, and this is like a much longer conversation, but like the way you enter a trade, the type of trades that you enter really have to do with your individual personality. And I have found, like in the past, years ago when I was first learning how to trade, I found signal services that I paid for, that I like signed up for, that had like good signals. Like their signals were profitable. They did work out, but like somehow I would still lose money. You know what I mean? It would be like I'd find a signal service, for example, in cryptocurrencies, where it was like some of the cryptocurrencies that they'd mention, I couldn't take those trades because like I wasn't, maybe those are only available in certain markets, and I don't have an account with them or whatever. So it's like the trades I was getting in would happen to be the ones that weren't profitable, and the trades that were profitable would be the ones I just happened to not get in. And then there's also a matter of timing, right? A lot of times that's something I noticed with like Peter Resnick's options expiry, was that like I tried to trade the options that he would suggest as he would suggest them, but like I would never be able to get in at the price level that he got in at because the signal would go out after he entered, and so on and so forth. So anyway, the point I'm trying to make is, for each individual trader, the best strategy for you is to find your own system for entering trades. And I know that that's really frustrating when you're trying to learn, because you're like, great, I'll develop my own system. Wonderful. Can I just start with your system? Can I just start with you teaching me how you do it, and then I'll figure out mine based on that? And that's totally fair. But just in my own experience, that's not the best way to do it. The better way to do it is to first focus on your own market understanding. So like, the best way I can think to say it is like, don't look for trades. Stop trying to trade. Stop trying to figure out where to go long, where to go short, what size to use, whether to use options or futures or the stocks or whatever. Stop thinking about all of that and just solely focus on reading the market. Get to a point where you can sit here throughout the day and you can just know what the market's going to do. You can sense it. You can feel it. You can tell if it's rotational or if it's trending. Get to a point where you're making calls that are very, very good. Your understanding of the market is very, very good. Then you start developing a strategy. And I often recommend to people they start with a paper account. Don't start with real money. Just start with a fake account and just trade on paper. And it might take you years. It might take you 3-4 years of trading on paper. And I know that sounds insane. But if that's how, maybe it takes you 4 days, maybe it takes you 4 years. Everybody's different, right? But once you have a strategy, so you have a market understanding, you know what's going on in the market, then you have the trading system. You start trying different strategies for trading. Then you learn about your own personal psychology, right? And you begin to realize once you switch from the paper money to the real money, you get into like stage 3 of the process, which is now you may have found a system that was profitable when you were trading on paper, but now that the human psychology comes in, because you've got all the fear and greed and all of that, when you start trading with real money, then that's your new thing to overcome. And so all of that is just part of building your own system. So I don't really recommend people go long where I go long, because where I go long is based on years and years of honing my skills and learning about my own psychology. How much pain can I take? How far can I let the market go against me? So on and so forth. So all I'm really trying to do with this live stream is just offer people my perspective at reading the market. It's just that first phase of the process. Get to where when I say things, you've already thought it before me. You already saw that we were getting resistance up here at the high of value. You already saw the weak references below and knew. Once you get to that sort of market understanding, then you start developing your strategy. I hope that helps. Okay, on the initial balance question, no, I don't look at initial balance because Jim Dalton doesn't look at initial balance anymore. He has just learned over time it's not consistent as a strategy to actually take trades. But that being said, There's tons of people on this channel that love it. So if it works for you, keep doing it. Do I think the push-up will find support above the POC? It's possible. I guess I'm thinking in the L period here. It's possible to stay above the POC. Oh, I don't know. Never mind. Another weak reference. The L period low is weak. So we've now got 5 weak references below, significantly increasing the odds that at least the first needs to be repaired, which would bring us below the POC. So this is not a prediction, but just for the sake of education. Remember, I talked about one of the key ways we use weak references is as they start to stack up, we know that it's short-term traders that did the trading and that they'll have to take profits. So the way we might see that fruition come to sight is you get an M period sell-off that randomly comes down here to repair a bunch of them out of nowhere. Let's see if that's what happens today. Philip, yes, I am actually working on putting together a membership type of program where people can pay like $10 a month and then get access. That's definitely something I'm working on. Building a website now. Yeah, design knob. If that's what you find, if you find that your trade ideas are right, but that your actual trading mechanisms aren't, like you're getting in too early, or you're taking profits too early, or you find that you're a laggard buyer, like you step into trades way too late, then you can just, like, you should feel good, you should feel confident, and know that you have what it takes to be a great trader. You can see what's going on in the market, and then you just attack each one of those issues individually, right? So if your problem is that you take profits too early, you come up with a strategy to teach yourself not to do that anymore, right? So for example, if it's taking profits too early, one thing you can do is a set it and forget it strategy, right? You enter your trade, you put a stop loss, you put a break even, a take profit, and you just walk away, and you force yourself every day, every trade, no matter what, to walk away and wait for the market to get to your target. And the more and more you do it, the more and more it becomes a habit, right? Then it becomes easier and easier. Okay. Weak hands here, weak sellers on the L period high. But that's one of those things I really feel like so many traders out there are right on the brink of profitability. They're right on the brink of being successful at this, and just the psychology gets them. The disappointment of knowing you're right and then losing money over and over again is what makes people quit. And really, I think way more people would be successful if they just had confidence that they will get to the other end. If your problem is with how you take trades, that is easily fixed. You just come up with a strategy for each problem one by one. Trading Donkey, I completely agree with they have to subtly roll out increases of the interest rate. they have got to very gently push that onto the market because, yeah, this thing's right on the edge. Trading donkey. If Jim Dalton jumped off a bridge, would I? Maybe. I might could. That man has taught me a lot. I mean, the thing that was the most revolutionary for me taking courses with Jim Dalton was he completely fundamentally shifted the way I look at the process of becoming a successful trader. Beforehand I thought about it more like you just have to learn the right information. Like I just kept thinking if I can find the right tool, the right trading service or the right book to read, or if I could just get some piece of information that I'm lacking, then I'll be profitable. And what Jim Dalton teaches is like, it's not about the information. It's about the practice. It's about, I can teach you how to play basketball in a day. I could teach you how to dribble. I could teach you all the rules. I could teach you how to shoot, the proper way to hold your hands, the proper way to jump, everything. I could teach it to you in a day. But that doesn't mean you're going to be ready to go play in the NBA the next day. You have to then spend a decade or more practicing, honing that skill every day. Then you're good enough for the NBA, right? That was the big shift for me with Jim Dalton that changed everything, was realizing I was spending too much, time and energy trying to learn all these different systems and tools and all this shit and never taking the time to master any of them. So now I have one thing I look at, or two, I guess, the market profile and the market internals. And I'm just trying to become the best in the world at looking at these two things. And that fundamental shift has been the most valuable for me. Chris, yeah, trading is my only source of income right now. John, only if he had good excess on his dive off the bridge. Okay, I'm not jumping off any weak bridges here. Yeah, Jonathan, I've got your donations. We're up to I think $20 on the singing lessons. So I promise you, I'm gonna hone those skills too. Okay, that L period low is repaired. I'll be like opera singing in this motherfucker. Are you down with the POC? You know me. You know me. Don't act like you're not impressed, design knob. Wow, 112 people watching, 92 likes. The record is 100. Can we beat the record today? Are there 10 brave souls willing to push that like button? Don't do it, Chris. No. Jonathan, the donation for the $5. Thank you, brother. Appreciate you. As always, my man. Thank you so much. Yeah, it's worth looking at the thing and seeing where you're at on the overall donations. Well, highest this week. Jonathan, you're ninth of all time. But you're definitely the most. Oh, boy. You're definitely the most donations in terms of individual donations for sure. You know I love you, dude. Brian, not really. I mean, sometimes like for little tiny, like if I'm trying to figure out do I go here or here type of thing, a few ticks from each other, I might look at the DOM. But really, I'm looking more at just the market profile itself. Looking at the little random nodes of volume that kind of jump out. That's generally where I pick my entries. I also ladder in and out of positions a lot of times. So like, for example, I'll go short as the J period gets up here. And then if I don't take the profits on the pullback, I'll like add to it in the K, add to it in the L. You know what I mean? So I kind of like slowly step into positions. It just depends. Every trade is its own thing based on whatever's happening in the market at that moment. Okay, so as the market rotates back below the POC, we're looking for support. It can happen anywhere in here. It could be any of these little nodes of volume can become support, as well as the 20 moving average on the 15-minute candles could once again become support like it was earlier here. And then if not, the repair of these first week references is a great target. Whew, we're at 99 likes and 99 viewers. We're so close to that magic round 100 number. Sorry, brother, I'm having a hard time reading your name here. Torkov? If I totally murdered that, I'm sorry. It's a great question about the shape of the profile. I do think this is a B-shaped profile. Okay, B is in boy. What am I talking about? Basically, ignore this one to the left here where it's expanded out and just look at the collapsed profile. Doesn't it kind of look like a B? Right? It's not a perfect B, but it's a B. And so what does that tell me? Well, that tells me that this was likely more long liquidation than new money selling. Okay? So what does that mean? Well, if I'm trying to ask myself, and I don't trade the overnight, but let's say I was trying to ask myself, what's going on in this market? Whoops. So the overnight trade was almost entirely net short last night, right? This is where they're, come on. This is where they opened. This is where they closed. So you could just guess that 80 to 90% of the trade that took place, 80 to 90% of the volume that took place in here, it happened short. Most of them were short because they pushed the price all the way down to here. So the first thing I'd be thinking to myself is, I got a B-shaped profile for today, which is a sign of short covering. I mean, sorry, long liquidation, not new money selling. Okay, so that's just the old business being concluded, not new business trying to sell on top of it. So I've got that in my mind, and I've got the idea that 80% or so of the overnight traders are short. So what are those 80% of the traders going to do when they open up their screens this morning and find we're all the way down here, and that the selling that brought us down to here was just a liquidation of old business? Probably they're going to go long, right? They're going to take profits. All the people who went short are going to take profits on their shorts. So that's going to start to push the market higher. And then the realization that this is a good low will bring in the buyers that'll push us higher up into these single prints. That would be my guess. My guess is that we're going to open tomorrow above our value area. But honestly, that's not my game, so it's just a guess. Okay, here we go, heading down to look for support down here. John seeing the C-shape profile. It's quite an eye you have there, my friend. 101 likes. Fuck yeah. Thank you guys. Oh, that's awesome. Thank you so much. I really appreciate you. Joshua, if you're still here, man, thank you so much. That's the way to do it. My own personal trading philosophy, the thing that I'm really focusing on now, the narrative that I'm driving into my trading every day, is this concept of you only need one good trade. That's just something I figured out. If I just focus on getting one good trade a day, where I have confidence, I step in with size, I have the discipline to stay in the trade until the maximum profitability, one single good trade a day is all you need to make a living. And that's sort of what I'm focusing on right now. Well, I'm working on it. I still take like 10 fucking trades a day, but I'm working on trying to be disciplined and only take the perfect entries, you know? Okay, so 20 moving average. We didn't quite get down to it, but it looks like it's going to be support when we do on both indices. Here's the M period. All right, guys, hit me with your projections. Where are we going to be in 30 minutes? Where is this market going to close? Will we repair some of these weak references below? Will we push up into the single prints above? Will we go nowhere and just bounce around in this range? What do you think? Hit me in the chat. Pascal says going up. Ding. Am seeing a pull down to the 36 area. Torkov is seeing a rotation all the way down to 41.11. I don't know, brother. That's quite a sell-off. That seems statistically unlikely to me. Paul A seeing halfback. Alex is seeing a repair of the week low. Do you mean this one all the way at the bottom? The week F period low? And then a bounce back? Come on, there's 95 of you here. I thought you people were traders. No one's got a guess as to what the market's going to do? Just I and J. Yep, a repair of that. Rotation back up towards the POC. Very high probability. Trading donkey. Yeah, we can all recognize that feeling. Okay, Matt's seeing a sell-off down to 25 and then a rotation back up to 40. Also a good high probability scenario. RK is seeing a push up to 62. Ooh, that's quite a push, my friend. Not impossible, though. Once we get up into these single prints, it could rotate very quickly. So it's not impossible. Lewis is seeing the same thing with the short squeeze. Philip is seeing a rotation just above this weak L period high. Okay, well now it's happening. No more time for predictions. I don't know, Slade. We've seen it do it in the last 5 minutes enough times. It could literally, like, I've seen this shit in like the last 2 minutes of the day. It'll like, vroom, all the way up to there, vroom, all the way back down. Like, it'll do crazy stuff. All right, we're back above value, creating another weak reference here with the M period high. Okay, so as they go to break out to the upside, just to give you guys an idea of how my brain works, what I'm thinking is, who are the people holding these contracts, right? Probably there are people that bought down here and here and here, which I've established is short-term traders. So wherever this M period reaches resistance, as it starts to work its way up into these single prints. And it can work its way all the way up to the top. I don't think it will, but it could. But wherever it finds resistance in here, I think the fall back down will be very quick because these people have to take profits at some point. Okay, well, they literally only got 2 prints into the single prints before they started to fall again. Once again, that's just that they're weaker hands traders that need to take profits. Alex, sorry, I'd stepped away for a moment. Yeah, so you were asking bouncing around up here, was that bearish or bullish? It was really neither. Um, the market's in rotation, so it was just rotating, right? This is what the market does when it rotates. It gets above the POC as far as it can go, and then it pulls back down. It gets below the POC as far as it can go, and then it pulls back up. So it's just regular rotation happening here. The reason why, again, like I mentioned, because the buyers in this market have been weak hands, they have to take profits. So they waited, they were patient, they waited till they got above the value area, but then as soon as they got their chance, they started taking profits, which pulled us back down in. 15 minutes to go. All right, here goes the last 10-minute murder bot coming in to bring in the volatility. Phoenix for the win. Murder bot just murdering price. Yeah, the halfback is actually down here at 41.45.25. That is the halfback. Okay, so this has happened twice now, right? They were able to push the M period 2 ticks above the B period. And then what happened? Boom, brought in the sellers, pulled the price back down. Then they were able to get about $1.50 above that, right? And what happened? Boom, brought in the sellers, pulled the price back down. Okay, they're taking profits. The buyers have to exit their trades. All right, last 5 minutes. How far can they push it? Can they get up to the overnight low? Man, can you imagine if you were an overnight trader who like woke up this morning and then you see that the market traded its way all the way down here? Like, let's say you went short, right? You went short in here, and then you get back the next morning, you see the market sold its way all the way down here and then came right back to your entry. You'd be so upset with yourself. Look at how tight this range is on the regular candlesticks here. That's interesting to me. How solid that slow grind higher has been throughout the day today. That's like the definition of balancing, right? And then this is just the breakout of that trend. Do it. Do it. Overnight. Overnight range. Overnight range. You can do it. Boom. Back into the overnight. Okay. So how am I looking at this moving forward into tomorrow's trade? Well, for one thing, value much lower today. That increases the odds that value will continue to move lower. We have left a ton of excess behind here in the form of the gap and the single prints. Okay, excess often leads to balance. So the question becomes, does the market want to balance off this excess with price by pushing the price up here, or with time by staying down at these levels longer? Obviously, this M period is telling us that it's probably more likely it wants to repair it with price. Okay. So value is telling me likely continuation to the downside. Price is telling me a likely return to yesterday's low. All right, well, that's a very bullish way to end the day with a spike higher. Spike rules will be in play for tomorrow morning. And those will hopefully give us the indication of whether the market wants to push its way back up into this range or needs further downside continuation. I don't like the weak references left behind, but as you can see from 4.9, it does happen, right? Sometimes you leave these weak references behind and you just don't come back. So let's see what happens here. Let's see how the overnight takes it. Record number of likes today, 104. Previous record was like 101. So I appreciate you guys so much. Thank you for joining me. Thank you for the great questions today. And I look forward to seeing you all here tomorrow morning. May the 4th be with you.